Well, hi there. Welcome to Markets Tomorrow right here on ET9, the Mumbai News Center. I'm Sandeep Gill. And what a day it was really for the markets, succumbing to selling pressure in the last hour, but still holding on to 8,600. The market closed at the day's lows, but there's respite coming in from the fact that it held on to peak critical technical levels. And for the broader market, there is of course more pain, which was reflected in market breadth. That's a bit disconcerting, the fact that the underlying market breadth was not very supportive for the index performance. There you go, 1,091 to the declining side with 443 stocks advancing. Just quickly highlight then through voices on the show on what the trend looks like for the near term with Sunit Arora of Helios Capital, Atul Suri talking about the market technicals, Mayuresh Joshi of Angel Broking will take us through his fundamental views, and Kunal Botra will help our viewers with trading ideas for tomorrow's session. To the top stories then, it was really about the index closing at sub 8650 levels. Market seeing profit taking on the back of a weaker Europe. You had the big Q in GST, which is to be listed for business in Rajya Sabha tomorrow. And this is the closest the government has got to ensuring the GST becomes a reality. It seems like all the consensus that was needed for the bill has been brought on the table, and that now it is just a matter of time when they actually get the numbers in the Rajya Sabha to see the bill through. We'll have to wait and watch out for that tomorrow. It's going to be our big story all day in tomorrow's session, and the market also will react to that. Maruti was of course in top gear. The stock hit 5,000. Good sales numbers reported for the month of July. Tata Motors of course reported a 7% growth in July sales, and that augured well for the stock as well. You had Hero MotoCorp, sales were up 9% in the month of July. So again, it seems like the month of July worked out pretty decent for among the auto names. Also, some surprises on earnings. An Indian bank rallied 20% in a single session. It's rallied about 114% in the last 6 months on strong Q1 earnings. Good PAT performance, good net interest income performance, and stable asset quality helped the bank and the stock to rally higher. Bharat Financial, erstwhile SKS Microfinance, slumped on the arrest of Billy Raj. That was a bit of a sentiment break for the stock in the session, and that's why it plummeted almost in excess of 8%. The question we are asking is, will the GST passage take the Nifty to all-time highs of 9120, or even taking it past 9,000, which is a big psychological level? Mayuresh Joshi as well as Kunal Botra join us with their perspective. Good evening to both of you. Mayuresh, how closely are you watching GST? I'm sure closely enough. But what would it mean for the upside to the markets? Because a large part of the market has, through the month of July, been preparing for this reform.
Evening, Tanviro. Absolutely. I think everybody's keenly awaiting on how the passage of the GST will get through in this monsoon session. And if it turns out to be a reality, I think the markets are going to rejoice. However, I think liquidity is still very, very strong into our markets. If you have had that additional push of liquidity along with GST passage coming through, I think the markets will see buoyancy going ahead as well. So clearly, I think the markets are seeing good times going ahead as well. We still expect positive sentiments to play through on the markets. And yes, I think if the GST goes through along with what you've seen in monsoons, the earnings have been quite okay so far. But again, I think the earnings recovery expected in the second half, if that probably comes through over the next few quarters, I think we'll have a re-rating of the markets. But at that point of time, I think liquidity and all these positive momentum, which is the passage of the GST, which is a big thing for India Inc., I think that will take the markets higher in my opinion.
Kunal, your sense on the charts?
Well, Tanvir, I think the last couple of days the index has been consolidating. I think we've seen some sort of mixed sectors trying to pick up action one day or the other and trying to support the markets. But I think in terms of the last couple of months as well, we've seen a good momentum. The markets have been ready for this particular set of events. But I believe that since the global factors are the ones which probably lead or probably have led the rally since March, when crude rallied from 25-27 odd dollars. Now you're seeing some sort of divergence happening across the globe. I think many of these emerging markets and a couple of these developed markets, they're showing some signs of probably being on the overbought terrain or some sort of correction. So I think GST could be a trigger which the markets are definitely waiting for, no doubt about it. But I think whether the markets would sustain or not, I think that would probably be answered on how the global markets shape up over the next couple of days. So I think yes, the Nifty seems to be in a good flow. The momentum seems to be intact. as such, but I think one has to be really cautious at this point of time because there are too many sort of mixed events and mixed set of data points which one can come across.
So the local link is tied to GST, but the global correlation is really driven by what happens in the crude markets, what happens in China, the central bank action. Like Kunal pointed out, there are too many moving pieces out there. But let's really talk about that local link in GST and what it could mean for market sentiment on domestic turf. And Ajay joins in with a quick perspective on the stocks to watch out for. What would be the direct impact on businesses and listed businesses on the bourses on account of the GST clearance? Ajay, tell all.
Well, hours from now, market will get to know how much progress GST has actually made between the allies and Congress as far as the ruling government party is concerned, and how much of negotiation has actually borne fruit. But markets to a large extent has already started factoring in progress on that. This definitely is one of the biggest reforms undertaken by the government so far, and is likely to add a lot of boost to the overall GDP, anywhere between 1 to 2%, and hence impact earnings for corporate India as well. As far as CLSA's preference list goes, M&M and Maruti are the top bets from the auto space. From the consumer space, it's the Asian Paints and HUL from the large cap, and Havells and Crompton Consumer from the broader market. They believe that on the downside, stocks can also be impacted, like ITC, United Spirits, etc. But overall, the belief is that this is actually going to be a very big boost for the Indian market and the economy, particularly from the foreign investors' point of view, and the flows are likely to improve going forward.
Thanks, Ajay, for that. Let's also talk about how the view in India is from offshore investors. One prominent among them being Samir Arora of Helios Capital outlined how he sees the India story in the context of emerging markets, Asian markets largely, and tie that fundamental view or a trader perspective with the technical stance that Atul Suri is taking for the markets going forward from here.
And the government's effort in the last 2 years finally seems to be converting into businessman seeing an order and seeing some business. And also there seems to be definitely a TINA factor that with India doing relatively well, its currency stable, having survived Brexit with dignity, so that it didn't scare anybody, a positive performance leads to further confidence in the minds of the investors. So right now it's all pretty okay, and monsoons are on track, and we hope that GST will at least get cleared. The only thing is, in the last 1 or 2 months the market has been up a lot, but over any 3 months period, I think it's part of life.
Volatility is the name of the game.
Right now we like this volatility, upward volatility.
Let's also talk about your outlook in terms of sector allocation. Private sector banks and NBFCs is something that you've been fairly upbeat on. That's the way to go, you think?
Well, we own them because we own them for a long time, and last 2 months they've gone up a lot, particularly the NBFCs and particularly microfinance. So to a new investor, I'll say take your time. We can enjoy and maybe trim a little bit. But for a new investor to start today, I would not be so confident.
Let's talk about your outlook for sectors that you would be on the watch list or the caution list right now. Do you think that perhaps some of the sectors contingent on what government policies could do would be a little bit of a caution?
No, I would think that the issue is that even if every sector is doing well, some sectors are more secular, less volatile, their market potential is higher, and they don't have to every day worry about global issues. So even if everybody is doing well, we would like these sectors. But clearly in sectors where either a global hit is very big, not hit but positive or negative, that means global factors determine that sector. Basically any sector which is commodity linked, where the price of the commodity is the determinant of whether your company will do well.
Metals, does that fall
under the bracket? There, chemicals, all these kind of things we will not do, because we don't relate to how to figure out what should be the price. Now at some very extreme time you may say it doesn't matter what the price is, they are so cheap. We don't think that is the case here, because the debt of most of these companies is very high. So if the commodities were to correct a little, you would have maybe 1.5 times impact on the prices here.
Reject the market at 9100 by virtue of my pattern, but I really will not be surprised if it goes beyond, because the targets that are coming out for the emerging market indexes, and if you look at a lot of the EM spaces like places like Argentina, Brazil, Taiwan, you'll find that they also are doing phenomenal stuff. It's not just India or things like that. So I really feel this outperformance by EMs is going to be the biggest theme. You're going to see that in currencies also, and you're going to see it in equities also. And going ahead the next 3 to 6 months, I feel that this is what is going to dominate. And that is what is getting reflected in the way stock prices are moving. I feel that if the currency, if you have this break below 66 as a percentage because of the leverage factor, I feel currency would be a very interesting trade to be in. I feel that the whole consumption theme, and I think the whole auto space is very interesting. And if one wants to take a higher element of risk, I think real estate is panning out very well.
Welcome back. You're still watching Markets Tomorrow right here on ET. Now, talk about specific earnings before we get in a quick perspective from both our guests on how things are going to be shaping up tomorrow. Aside of GST, we're going to be looking at HCL Tech's numbers as also Titan's earnings coming out. Sunita joins in with a quick preview on what to expect from HCL Tech. Sunita?
Absolutely, the last big IT company to report its number, and we are expecting HCL Tech to report a strong quarter, and this will be largely because of the inorganic growth. We are expecting dollar revenue to grow at 5.6% sequentially for this quarter, largely led by the Volvo deal that ramps up, and also the external IT business of Volvo that will be incorporating will start contributing from this quarter. So that is expected to bump up the revenues. But if you look at the organic growth, we are expecting 2.5% sequential growth. And we are expecting roughly about 65 to 75 million worth of revenues coming from Volvo. If IMS is expected to get a bump up because of this deal, and while the software services is expected to grow at 2.5% sequentially in this quarter, but the main focus will be on the margin performance. Remember, margin is something that has led to the stock underperformance, and if you look in this quarter also, we are expecting 110 basis point decline, largely because of the visa cost and also the lower margin that the Volvo's external IT business has. So as a result, we are expecting net profit to show a decline in this quarter, but it will all depend on the deal wins or the management commentary as far as margin is concerned, whether the Volvo's margins can be brought back to the company level in coming quarters. This is something that we'll be watching out very, very closely. So margin commentary will be very important from the management side.
Thanks, Sunita, for that. Mubina, come to you, and what do we expect from Titan tomorrow?
Well, after seeing very disappointing numbers being delivered by Titan since the last couple of quarters, this one may actually turn around to be a good one for the company. Top line is seen growing by close to 14% at 3,060 crore rupees, EBITDA higher by 23.5% at 275 crore rupees, and that's going to lead to a margin expansion of 70 basis points at 9%. And lastly, net profit is seen at 185 crore rupees, higher by 22.5%. Now, their mainstay business, the jewelry business, has of course been marred by a lot of problems since the last couple of quarters, be it the industry-wide strike, be it the PAN card regulations. But this time around, we are working A, with the low base, and B, of course, with the GHS or the Golden Harvest Scheme activation. So these are something that's going to drive the jewelry growth, and in fact, it's expected at 17 to 19% this time around.
Would continue to perform well in the near term on the back of strong numbers. Indian Bank was a classic case of a big surprise.
Well, yes, I think that's been the case, Tanveer, and if you look clearly, I think you need to understand that if the asset quality pressures are seen ebbing in a few of these public sector banks, I think you're going to see a tremendous amount of stock reaction happening on the same day itself. But the greater moot point here is whether these earnings recovery is sustainable, and with the kind of watch lists that a lot of banks have declared, specifically on the corporate stroke SME side, if they're able to sustain that in the next quarter, I think there'll be a huge amount of re-rating for a few of these stocks. Though my opinion is, I think banking as a whole, I think the pain might continue at least for a quarter, to say the least. You will see elevated credit costs, and unless you see meaningful credit growth come back in the second half, my own sense is that you will possibly be looking at more of recoveries and upgrades, looking at the figure of slippages from the restructured book. The watch list is equally important for companies or banks who have declared that, and that probably will have some amount of say in terms of subdued return ratios, specifically the capital return ratios. So again, I think not expecting a great set of numbers for the entire pack, but yes, specifically I think a few banks which will report reasonable and better set of numbers are going to get rewarded in this earnings season, though the sustainability has to come through in Q2, Q3 numbers as well.
Okay. Having said that, Mayuresh, do you think that through this earnings season, IT has been a bit of a disappointment, but largely, one would still bet on the consumer themes. So, you would still keep the faith with the ITC, Marico, HUL, despite their volume growth numbers trending towards the lower end of the range?
Now again, I think if you talk about the entire pack and where you talk about consumer durable staples, stroke FMCG, you're probably expected to see volume growth recover only in the second half. The good monsoons, the pay commission recommendations will start bearing fruit Q3 onwards. So I think it's very difficult to probably start assuming that Q2 you'll see better volume growth numbers start coming through. And one also has to account for a little bit of adjustments on the input cost inflation going ahead. So I think it's going to be an operating leverage performance that these guys need to come out with. More of volumes, probably better realizations expected to come through because of these factors, and that probably will offset the effects if the raw material prices and the input prices move up. Having said that, probably I think one really needs to be selective within the FMCG pack. I think the companies who are probably into consumer durables are expected to do well, but again with GST coming out, you're not really sure on what kind of sin tax might come through if it does come through. So again, I think there might be some amount of pressure for a whole host of these cigarette makers, but generally I think the FMCG stroke consumption stocks should do well, but that recovery will be evident only from Q3, that is the second half of this earnings season.
Okay. Particularly in the session today, Maruti as well as Eicher Motors have been two standout stories in autos. Is there an overweight still there, Mayuresh?
Now again, I think the stories are cyclically looking very good, and if you look at how the performance has been for both these companies, I think the performance has been commendable, specifically on the operations side. So again, I think from a volume perspective, Eicher Motors was always expected to post reasonable amount of volumes. The kicker for the stock is going to be how the export market shape up for Eicher Motors, because they're already working on a huge base here. The kind of dealerships that they are adding, the kind of models that they're probably bringing about, I think is going to become a defining point for them. So I think the story looks very, very promising from a long-term perspective. Similarly for Maruti, I think the operating performance has been brilliant this time around. It really depends on the kind of product mix, the kind of platforms that Maruti is able to bring about, and the kind of leverage benefits that actually can come through. Again, I think we talked about GST, and I think GST can also be a kicker for the stock, because I think a whole host of its sales come from specific product sides, which is the small cars, and there the input cost differential in terms of the taxes paid and subsumed not getting offsetted can actually come through. So that can be margin accretive, along with the efforts that the management is doing specifically towards localization. So I think both the stories look extremely interesting and promising, and the numbers, in my opinion, if they get delivered over the next few quarters, I think the stocks might get re-rated even from those levels.
Okay, fair enough. Kunal, prepare our viewers for trade tomorrow, or where trading ideas?
Yes, there will be two stocks which I'm recommending. The first one is a sell on Vedanta. Now, it's an interesting chart because I think the stock corrected, in the mid part of the session today. I believe that it's opened a fresh leg on the downside. It's close to the 20-day moving average and also made a fresh swing low on the daily charts. So I would sense that there could be a series of continuation of short-term downtrend on the stock. 145 is the target which I have for Vedanta, and the stop loss at 160. And the second is a buy on IDFC. Now this is an interesting stock. It's not just from a short-term perspective, but the way the volumes are shaping up, the price is gaining upward trajectories in the last couple of months. I think there seems to be something much more in store for the stock. But from a short-term basis, looking at the chart patterns and the volume built up on every rises, I believe that the stock should probably head towards 61, 62 levels. Stop loss on the trade is 55.
Okay, gentlemen, I just want to get in one more top investment idea from Mayuresh. Very quickly, Mayuresh, as we draw towards a close, what would be your recommendation?
So again, I think the consumer durable stocks should do well. So anybody who's into the consumer durable space, whether they are electrical manufacturers, who's into lighting, LED, I think these guys should do well. And again, with GST expected to come through, though the benefits will come through after a year, year and a half, and will be evident after that on the balance sheet. I think the operational performance for a few of these players has been quite exceptional. So something like a Bajaj Electric will actually bounce back from lower lows. Crompton Consumer Electricals or durables, I think even that stock is looking very, very interesting. But again, I think one really needs to wait for declines to come through and buy in a staggered manner, and that will reduce your impact cost and improve your chances of getting a greater return on investment over the next couple of years.
Gentlemen, thanks very much for taking out the time to speak with us and share with us your insights to the markets. Really appreciate your views as always. That's a wrap on Markets Tomorrow. We'll catch you with the markets as always from morning at 8 a.m.